In this video, I'm going to show you how to make $1,000 a month through dividend investing. If you're like me, you love getting money for doing nothing. That's why I've put together this easy video on how to invest in stocks that pay dividends to get the most bang for your buck. It's no secret that you can make more money investing in dividend-paying stocks than an equivalently priced index fund. The question is, how much? In this video, I'll show you a strategy for making $1,000 a month through dividend investing. In 2017, the S&P 500 paid out $381 billion in dividends to investors. That means there were over 3,000 companies paying out dividends to their shareholders just last year. If your goal is to build wealth and grow your income stream, dividend investing could be the answer for you. The best part is that dividend investing doesn't require you to be an expert on the stock market. You can invest in individual stocks with as little as $500, and all it takes is patience and discipline. What is dividend investing? Dividend investing is an investment strategy that involves buying stocks, bonds, or funds that pay high dividends to increase the potential earnings. One of the many benefits of dividend investing is that it typically produces a higher return than other investments. This is because investors will receive a steady stream of income from long-term investments, sometimes as much as 10%. Another benefit is that unlike other types of income, dividends can be withdrawn at any time without penalty. Two other benefits are that it typically produces a higher return than other investments, and unlike other types of income, dividends can be withdrawn at any time without penalty. Now that you have the basics down about what exactly dividend investing is, let's get into how you can potentially turn this investment strategy into a monthly cash flow opportunity for yourself. In order to do so successfully, there are 4 things I recommend doing. One way is by joining an investment club, where you can grow your money faster than if you were doing it on your own. There are also 2 other benefits, which are that dividends can be withdrawn at any time without penalty and typically produces a higher return than other investments. In order to do dividend investing so successfully and earn $1,000 a month, there are 4 things I recommend doing. Joining an investment club where you can grow your money faster than if you were doing it on your own, making dividend investing a monthly habit by starting with small amounts every month until you have saved up enough to make larger purchases, maintaining patience when the market dips because in the long run, this will lead to greater returns over time, since stocks tend to go up more often than down. How to get started with dividend investing. If you're just getting started with dividend investing, the easiest way to get started is to purchase shares of companies that you already know and like. You can then set up an automatic investment plan with your broker and let them decide which stocks will make the most sense for you. If you want to take a more active approach, there are websites that will allow you to screen for specific criteria and invest in the best fitting stocks for your portfolio. I suggest starting with companies that have a dividend yield above 2%. From there, you can set up an automatic investment plan with your broker. How to start a dividend portfolio. The first step is to determine the amount of money you have to invest. Once you know how much cash you can put towards starting your dividend portfolio, start looking for a broker that offers the type of stocks that you want to buy. You want to go with a broker that offers commission-free trades if possible, but even just getting the lowest price broker is better than paying too much in commissions. After you sign up with your broker, it's time to find some stocks. The first thing you want to look at is the company's annual dividend yield. The annual dividend yield tells us how much money will be paid out by an investment each year as compared to its current stock price. You don't need fancy formulas. A quick Google search of a company's name along with the words dividend yield is usually enough to pull up this information. Now that you have your list of potential investments, it's time to narrow them down. You want to look for companies that have a dividend growth history and are expected by analysts to continue growing their dividends in the future as well. A good package from just about any major stock reporting service will show you how much analysts think an investment might grow over the next few years. Why should you invest in stocks and dividends? One of the main reasons why people invest in stocks with dividends is for income. A stock with a $1 annual dividend typically produces $12 in earnings over the course of 10 years, whereas a stock without dividends will only produce $6 in earnings over that same time period. If you're looking to generate long-term retirement income, then dividend stocks are the way to go. Dividend stocks can also be a more stable form of investment than non-dividend paying stocks. Non-dividend paying companies are often reliant on new products or services. So if their product or service fails to attract consumers, then the company will not produce any earnings and therefore pay dividends. Dividends give investors another source of return in addition to capital gains, which makes investing in dividend-paying companies attractive for conservative investors who prefer less risk. Dividend stocks are also attractive because they can be reinvested to purchase more shares of the company. This is called compounding, which allows an investor's money to grow exponentially over time if it remains invested in dividend-paying companies. The best way to find the right stocks for your portfolio. The best way to get started with dividend investing is simply finding companies that offer dividends at or above 3% each year. These tend to be safe stocks since they have already proven themselves as steady earners over time. Once you've found some good investments, start slowly diversifying across different industries so that there isn't any one particular area's failures leading to losses in all areas of your portfolio. Remember, you don't need to invest in every company on the Dividend Aristocrats list. Pick one or two companies that can be part of your core portfolio for several years and keep growing their dividends each year until they are able to support a larger percentage of your total income needs. This way, as long as these stocks continue performing well over time, you will have an increasing amount of passive income coming into your life from them month after month. If something unfortunate happens with any stock in your portfolio, then it won't affect all areas at once, so much easier to fall back onto other investments if needed. Good luck! Tips on how not to lose money while investing in dividend stocks. Diversification reduces risk by making sure that your money is spread out over many different stocks in many different industries. This way, if one of them goes down, you won't lose much money overall. The best companies are the ones with a long track record for paying dividends and consistently increasing their payouts to investors year after year. If they do this every year, it's called dividend growth investing. Here's an article on how to get started with dividend investing. Don't be afraid of picking up the phone or emailing people. The more research you can do before buying anything, stocks especially, the better off you'll be. And if something sounds too good to be true, it probably is. So there you have it. Remember, the key is patience and steady growth. As long as you are reinvesting your dividends and keeping a close eye on your portfolio, you should see healthy profits in years to come. We would love to hear about your own experiences with dividend stocks. Let us know in the comments below. And don't forget to subscribe for more great content like this one.